By the way, before you ask me a question, I disagree with half of what Cathie said. No, this is really important. And I mean, I vehemently disagree wholeheartedly with this COVID comparison. So for all of you, your portfolios, everything, I will tell you a fact. AI is not a temporary thing. So when I hear someone compare this to COVID, that would mean this is just a panic thing. This is not algorithmic.
Markets rarely misprice noise, but they frequently misprice structural change. And right now, according to Jordi Visser, investors may be underestimating one of the most powerful transitions in modern economic history, artificial intelligence. Not as a theme, not as a hype cycle, but as a force that reshapes competition, profit models, and capital flows across the entire market. In this discussion, Jordi Visser, veteran macro thinker and former hedge fund manager, lays out a firm and unapologetically clear thesis. While many investors, including Cathie Wood, view the current AI-driven volatility as a temporary disruption, Jordi argues the opposite. In his view, artificial intelligence is not creating a short-term panic. It is triggering a structural repricing of corporate defensibility itself. His message is simple: artificial intelligence is not a phase. It is an irreversible shift. And if you care about where markets, technology, and Bitcoin may be heading next, you'll want to pay close attention to Jordi's latest analysis about AI, Bitcoin, and the current trajectory of the markets. But before we dive deeper, take a second to support the channel. Hit the like button, subscribe if you haven't already, and stay with us, because Jordi's analysis only gets more consequential from here. Thanks, and enjoy the video.
You know, if you guys have listened to our show, I have been emphatic about the fact that by 2030, most of the S&P 500 companies are going to be disrupted. So I just want you to look up a statement, and this is what I'm going to do on the weekend. Elon Musk has said that AI is a supersonic tsunami. What is happening in the market right now is exactly that. Software names can't catch a bid for a reason. They're making money. This is not about what they are today. A growth company, and this will all lead into positive things for Bitcoin eventually, so don't worry about it. But when Cathie talks about this being temporary, that is a mistake for everyone who owns software names. This is never going away. There are no winners in terms of winning. The winners are not public companies. So when Cathie tells you there are winners in AI, I don't work for a public company anymore. I don't work for a company. I chose that because the power of AI is for individuals sitting at home. And guess what? There are 7 billion people on the planet who've never been able to partake in capitalism. That is the positive story for Bitcoin. But everyone has free intelligence now. Everybody. So what is going on literally as we sit here? And at a morning meeting today, I said to everyone, Opus 4.6 came out last week. I didn't have the time last week to spend with it. Guys, it's 5 times more powerful than Opus 4.5, which is what caused this whole disruption. So we are speeding up at a point where recursive self-improvement is happening as we speak, which means the models are building themselves. So to sit there and think that there's a public company with individuals and friction having worked in it and watch the pantry conversations with people that don't work hard, this is over. Meaning this stuff is real. So the market has to digest this. It has to go through this. And I bring this up because this is not going to change. So the hyperscalers are at risk. The software companies are at risk, not to collapse because they're going to make money. But what is happening in the market is they are dealing with the fact that no company now has a moat. Their businesses are no longer defensible. And my attraction to Bitcoin was based on my belief that the only moat that Bitcoin has is what Mike Novogratz said. It is a community-based asset that is built on code, and the game of investing money is a game of musical chairs. There's a rotation happening, and people are avoiding everything that's built on code. They're moving it into physical things, which will continue because we're in a race to build out the data center. So I do not want people leaving here thinking they can just go out and buy any technology innovation name, because AI is coming for all of them, and I think it's going to be a long, long road for a lot of these software companies over the course of the next 5 years trying to deal with this. So the problem with Google and all these places, and this does get to the deflation thing that Cathie mentioned, and it's something that you've talked about, it's really hard to avoid the deflationary aspect. And since most people, and I was just at a conference where 80-something% of endowments and foundations thought inflation was going to be higher a year from now. So the reality is we have a deflationary situation that's happening, and the reason is because AI is driving that deflation as we speak.
Do we actually get to deflation, or is it just like this disinflationary where like we'll still have a little bit of inflation, it'll just be much tamer and kind of under control? Maybe it's 0.5%, 1%, 1.5%, but we don't actually go negative.
Yeah, now you highlight trueflation repeatedly, which is basically.
Do you like it?
Yeah. No. So the difference between trueflation and core CPI is pretty much all the shelter calculation.
Well, one can count, the other can't, but yeah, go ahead.
Yeah. One uses 80,000 inputs. One uses what they say 35 million inputs. So we'll go through what's better, what's not. But the shelter component and how you deal with shelter is the difference in the calculation. So if history serves well, unless we're going to see a bounce in the housing market, which I see zero chance of that happening, given the fact that people are under pressure at their work, I don't see that going on. If the stock market falls, you're definitely not going to have it. What would cause deflation is if the stock market falls off. And the reason I brought up the supersonic tsunami, if all of you raised your hand and I said, what's the largest position in your portfolio? And maybe you've got a trading account, but if you have a pension or you have anything, your biggest positions are software stocks. Not because you chose them, but because you're in the S&P 500 or you're in some kind of ETF that has mainly software in it. So I advise all of you to check that and go through it, because that's the stuff that's pulling the market. At some point, if you imagine trying to transfer all of the money in the world so quickly, and that's what Elon Musk said, there's a tsunami which is structural, but there's supersonic, which was all about the fact it's going to happen so fast that individuals, companies, governments will not be able to move fast enough. And that's what's starting to happen. I'm worried by what I saw in the last week, mainly from Anthropic, because if you guys didn't see it, one of the lead researchers on their safety group resigned. And he talked about why he resigned. He's going to do poetry now. That's how scared he is of what's coming. Dario Amodei wrote a paper on the negatives of AI. And the reason he's writing that is because he has models 6 months ahead. We're at the point now where they said, we had the model Opus 4.6 go through our code. This is a AI company, and see how many bugs they could find. They found 500 security places they could break into. That is the power of AI agents. That's the power of these models. If you can break into Anthropic, they can break into your bank account and everything else. So we've reached a point where the governments and everyone in the world just has to deal with the fact that this is no longer a game. We've reached the point that security is going to be an issue. And again, if I go back to the Bitcoin story, this makes cryptography much more important. Whenever I hear quantum, and quantum's not close to breaking anything there, we actually have something that will break things faster, which are agent swarms, and those are picking up now. And that's why go read about the safety person who resigned and went to go do poetry, and go read Dario Amodei. So
Jordi's core argument challenges one of the most widely accepted assumptions in growth investing, that technological revolutions inevitably produce dominant corporate winners. Instead, he frames artificial intelligence as a moat-destroying technology. When intelligence becomes abundant, scalable, and increasingly commoditized, traditional competitive advantages begin to erode. Software companies may continue generating revenue, but valuation multiples compress as defensibility weakens. This is where Jordi's thesis becomes particularly striking. He argues that artificial intelligence democratizes capability at a global scale. Everybody has free intelligence now, he says, suggesting that value creation may increasingly shift away from centralized corporate structures toward individuals and decentralized systems. Which leads directly to the next critical question. If artificial intelligence disrupts corporate moats, where does long-term value migrate? Because this is where Jordi pivots from disruption to opportunity, and more specifically to Bitcoin.
Let's say everything you just said is right. What do investors do? Do you invest in private companies? Do you hoard seashells? Do you buy Bitcoin? Like, what do you do?
So in the basics of what the government will do, there's lots of companies that are going to make money. And in the case of the hyperscalers, what we're talking about now is not the S&P 500 not making money. We're actually talking about multiple compression, meaning they're moving the multiple of the market down. And the reason they're doing that is because every industry is now under attack as to whether their business is actually defendable against this side. Normally that takes a long time. So one thing I do believe is that you'll get a panic. The hyperscalers are the most important thing. And when I say the hyperscalers, this is not Tesla, this is not Nvidia, this is not Apple. This is the 4 companies spending $650 billion this year. This is Meta, this is Microsoft, this is Amazon, this is Google. They're spending $650 billion this year. If they don't get the revenues in, then what happens is their equity has to go down, and their equity has to go down from a cap structure basis. Now, again, they're making revenues over 15%. So this is not some bad story. They have the capital to do this, but they become the line in the sand for everything. My gut tells me if anything bad is going to happen, it's going to happen in the next month or two. And the reason I say that is because the condition of mutual funds and hedge funds in trying to reposition for this, and the reason they reposition quickly is because they're paid on performance. And I was in that world. A hedge fund has month-to-month marks. If they're down 10%, they have to reduce risk. So the beauty of the way I think about Bitcoin in this scenario, so I'm hoping it gets flushed with everything else, and all of you should hear too. This is a temporary thing, and it's been matched up with SaaS. I'd be more worried about Bitcoin if SaaS was going higher and Bitcoin was going down. But these charts are overlaid for a reason, because they're directly linked between the VC world and the investment side of the ecosystem, but also because of it's built on code. So it should go down. And my ultimate theme has been that eventually when software is deemed to be problematic and AI is kind of this hard thing to invest in, which is where we are, Bitcoin would start to outperform. And then all of the meetings going on that you should invest in digital assets, you'll start to see the money flow in from the public companies and from the enterprises, from the wealth management people. But it's the only growth asset that is scarce. All these other places, commodities are not growth assets. Industrials are not growth assets. Now they are. Those are cyclical. Those are value. They're not growth assets. And most money is in a growth bucket. So if Bitcoin can break away when SaaS bottoms, and that's what needs to happen, is SaaS needs to bottom. And once it bottoms and we've discounted enough, we're at the lowest multiples we've seen in the space since before the iPhone. So we're at a point where you could find a bottom at any point, and that's what I'm hoping is going to happen. But the repositioning that happens says, and the reason I say a month, normally these things carry into the end of a month when it's been this bad, and then you get another week of it, and then you bottom out. That's what I'm kind of looking for, is that the risk is for the next 3 weeks, and at that point, maybe Bitcoin's down at 40,000, or maybe it hangs in here and it seems some rotation.
You have done this huge deep dive on using AI on a day-to-day basis. You come from the investment world. What are your tips or maybe direction that you can give to these folks on where should they start or how should they be using these tools to become a better investor?
First thing I would do is just, if you were recording what I said, just put that in the chat GPT and find where my holes are and correct me on whatever things are there. I think people should be using it every day at this point. If not for you guys, for your kids. I think it's a mistake for anyone to not realize how fast it's moving. We're past the point, and I've said this for a while now, but we are really past the point. Opus 4.5 to Opus 4.6 is shocking to me. Eric Schmidt didn't think we'd be at recursive self-improvement until next year, maybe latter part of this year. The fact that we're there now should scare the hell out of everyone, because nobody's ready for it when the leaders of the frontier models are saying it. So my big thing is get used to it, incorporate it into your life. It's only going to accelerate faster and faster. And regardless if another data center is built, it's already insanely powerful what you can do with it. So I'm on it all day long as a curiosity freak. I love it. The world's not going away. Even if the stock market falls down, you're going to have lives. Use it for your health. Use it for your kids in terms of developing new skills that they can learn to deal with this. We just created more jobs in a month than we had in a long time. Granted, they were all nurses and doctors in the healthcare field again, but there is a place where people can learn new skills. They can learn things. So I definitely highly recommend doing it. And you can always go to my website, and now I've got videos out on showing people how they can do the things that I do. I was talking to Russell Oken for a while. It was a great conversation, and I was very impressed with the way that he's thinking about it. And we had a very deep conversation on the way to think about AI as a thinking partner and how to use it in the way you do with work. But we talked about the thing it can't replace. And so you guys all know this. For all the things I said about how it's disrupting businesses, It cannot handle human context, and it cannot understand what humans want to read. I write 3 to 4 papers a week. They would not, no one would care to read them if they were written by AI. It takes my thinking about what's someone else wants to read, what's in their mind, what they're worried about, what's going on. I'm actually speaking emphatically today to you guys because I want you to hear and be lucky that you're here to hear that, hey, if something goes on in the market, you heard it from me that there's something really alarming going on with Opus 4.6 and the safety person leaving at Anthropic and why this is a bigger story than it should be.
Jordi's framework reframes artificial intelligence not just as a technological revolution, but as a capital allocation event. If artificial intelligence compresses margins, accelerates deflationary pressures, and weakens traditional equity advantages, investors must reconsider what qualifies as a durable growth asset. Unlike software platforms, unlike cloud services, unlike artificial intelligence models themselves, Bitcoin's supply dynamics remain fixed. No dilution, no margin compression, no competitive disruption from superior versions. This is why Jordi characterizes Bitcoin as possessing a unique kind of moat, not corporate, but structural. He also highlights a critical market dynamic often overlooked. Most global capital is benchmarked to growth mandates. Commodities, industrials, and cyclical assets may perform well during certain phases, but they do not typically occupy the growth allocation bucket. Bitcoin, however, increasingly competes within that category, particularly if traditional growth equities face prolonged multiple compression. Importantly, Jordi does not frame Bitcoin as immune to volatility. In fact, he expects correlation during risk-off phases, but his emphasis is on relative performance over time. If AI-driven deflation challenges equity multiples, scarce digital assets may gradually attract capital seeking asymmetric growth profiles. There is also a deeper philosophical layer to his thesis. Cathie Wood's model envisions artificial intelligence concentrating value within dominant platforms and innovators. Jordi's model envisions artificial intelligence distributing value, weakening gatekeepers, empowering individuals, and elevating decentralized networks. Both perspectives acknowledge artificial intelligence's scale, but they diverge on who captures the upside. And this distinction matters profoundly for investors. Because if Jordi is correct, we are not merely witnessing sector rotation, but a shift in how markets price scarcity, defensibility, and long-term value storage. Whether you fully agree with his conclusions or not, the analytical framework demands attention. Structural shifts are rarely obvious in real time. They are recognized only after capital has already moved. If you found this breakdown valuable, support the channel by liking the video, subscribing for more investor-focused analysis, and sharing your thoughts below. Do you agree with Jordi's thesis on artificial intelligence and Bitcoin? Thanks for watching, and we'll see you in the next video.